You're watching the Daily Market Comment by Hara Lambos Pisuros. I'm Cristina Marujos, and thank you for joining us here at XM.com. The US dollar extended its slide yesterday and kept drifting south during the Asian session today, with investors liquidating more of their long positions after the Fed released the minutes of its latest gathering. The minutes revealed that policymakers largely agreed that smaller rate increases may be warranted henceforth. However, what appeared to be more important for investors were the increasing concerns about overshooting. Participants emphasized that the terminal interest rate level and the evolution of monetary policy thereafter had become more important considerations than the pace. The fact that the discussion took place prior to the inflation data may have added some credence to market participants' bets of nearly 2-quarter-point rate cuts by the end of 2023, despite several policymakers pushing against an imminent pivot. The greenback may continue to fall for a while longer, especially with the S&P Global PMI sliding below the boom or bust zone of 50 and marking the fifth straight month of contraction. Nonetheless, the prospect of a full-scale bearish reversal likely remains premature. A more determining event on whether the correction is over or a bearish reversal looms may be the December FOMC gathering, not the rate decision per se, but the accompanying language, as well as the committee's updated economic projections. Stock investors cheered the outcome of the minutes, with all three of Wall Street's main indices closing the day before Thanksgiving in the green. The rate-sensitive Nasdaq gained the most, adding 1% to Tuesday's rebound on hopes that interest rates will not weigh on valuations as much as it was expected a month ago. Yet a bullish reversal in stocks is also off the cards for now. Although weak U.S. data enhanced the notion of a slower rate path hereafter, a damaged economy is far from a positive development for the stock market. Thus, in case the outlook deteriorates further, the market impact of weak data on equities may well change. Wall Street will stay closed today due to Thanksgiving. Oil prices came under renewed selling pressure yesterday, with investors placing emphasis on reports saying that the G7 nations considered imposing a price cap on Russian oil above current levels, while U.S. data showed a larger than expected build in gasoline inventories. Both Brent and WTI crude prices fell more than 4%, getting again closer to their September lows. The news comes on top of worries about demand, especially from China, where a resurgence of COVID cases led to more restrictive measures. Therefore, it may be a matter of time before we see oil prices extending their slide beyond their September lows. This was a Daily Market Comment here at XM.com.